Okay, we're live.
We're live.
We are officially live.
Live on Clifco Studio, TLRA Media, Influence Studio. Yes.
Well, welcome, James, back into the podcast.
Of course.
I
Pleasure to be here.
cannot
Thank
wait
you.
and excited for you to share all your insights. James Chen from Clifco Mortgage. He's the superstar that closes a lot of great deals. He helps a lot of clients achieve some very, very interesting results. Some challenging cases, some easy, and some complicated.
Of course.
He's the master of it all. So when you're ready to buy, you definitely must talk to James.
Thank you. Financing is
Your passion.
my passion, and obviously everyone's different, right? And every scenario is different. So here, Clifco, what we do is we make sure that we tailor towards everyone's difference, so we can tailor toward the financing loan options. So this way, customer can weigh out their options and what's best for them. And that's what we do here.
Excellent, excellent. James, how long have you been in the industry?
21 years.
Wow.
Yeah.
In 21 years, have you witnessed the market like right now?
No, I think the last couple of years after the COVID has changed drastically. Obviously, rates was all-time low during COVID, and right after that it changed, and market just kind of saturated with with a lot of buyers, and now with lack of inventory. So usually when you see the rates go higher, you would think the selling price would go down a little bit, but
We're not witnessing
I don't think we're seeing that, right? I don't think. I mean, in the area that we work, I think last time that we had an open house, there was a line outside the door. People were waiting 10, 20 minutes to get into the house. Yeah.
Lots of buyers, no inventory. So it's a great message to all the sellers out there. If you are on the market and you're thinking to sell, do not wait. Right now is the perfect time, because once market starts to shift, we don't know where we're going to end up being, right?
Exactly, and it's always hard to chase the interest rate, right?
Of course.
If you look at what the Fed was doing last year, they did lower the Fed funds rate, but at the last meeting in December, the Fed did mention that for this year, the forecast was to lower 100 basis point, but that's no longer on the table anymore. And then with the last week's job report for January, the market was more vibrant. There was more job created than what it was, what the market was, anticipating. Now the rate shot up again. So to capture the interest rate, to lock in the rate, it's hard. It's like playing stocks, right? So what I always tell my customers that if you love the apartment, because personally I think finding the place, the house, the property that you like is harder. So if you loved it and you're comfortable with the payments, it's to go for it, and then hopefully when the rate drop in the future, lower, you refinance, and that's the best I can do it. Because if you don't purchase the property now, and if the rate does drop, I'm pretty sure the price continuing is going to go higher.
Absolutely.
Yeah.
James, do you think in 2025 there is any new products that could be coming out?
In terms of new product, I'm not quite sure, but there are a few existing products that's becoming insanely popular in our neighborhood. A couple of them, a few of them, just to name a few, a DSCR program, debt service coverage ratio. So this program focuses primarily for investors. If you're looking to purchase an investment property, and we're just now looking at the rental income to offset the mortgage payment, that's it, dollar for dollar, one ratio. You don't have to go through the lengthy process where we're going to look at all the paperwork that a person's looking to apply for, right? If for example, I had a customer right now, they're a doctor, and they have about 17 business. They have different products they invested, and then they have close to another 17 properties. So if you look at the tax return, there's a lot of paperwork, and he's just looking to buy something for his elderly mom to live in. And instead of providing all these paperwork, guess what? We just end up doing a DSCR loan. We look at the rental income coming in to offset the mortgage payment. As long as
it's clean, it's easier.
Yeah, that's it. No question. That's all we're looking for. The rental income covers the mortgage payment. Done. We don't ask for any other paperwork. And he's very happy. Yes, the interest rate is slightly higher compared to the conventional loan, but in terms of paperwork, these people, they're so busy. They're he has patience, he has his business that he's running. He doesn't want to pay by the paperwork. So this is an alternative way to help customers that who just want to streamline the process to get it faster, get it done faster.
How long on average nowadays it takes for you to underwrite a new loan?
To underwrite a file right now, takes about 2 weeks to get a commitment letter, sometimes shorter, sometimes a little bit longer, depending on how busy we get. But turnaround time, I would always say somewhere around 2 to 2.5 weeks. Yeah.
How do you guys predict the market in the next year?
To try to predict the market is always going to be tough, right? Especially with what just happened last Friday with the job report. I think it's still going to be somewhat interesting first quarter. We really have to see what a job report and everything else that happened for January and February, then we can have a better understanding. I'm optimistic because even though the rate has gone up quite a bit compared to back in September, people still buying. I still have people buy, towards the end of the year, people still investing. They're still looking to buy investment property. People still buying their primary residence. I think people realize that the rate is probably not going to count down sooner than later, and they still have to move on, right? They still have to buy a place. So the ones that are ready, they're ready to move. They're ready to purchase. So overall, I think the market is there. It's just the inventory. I think that's the biggest challenge that we're going to see.
Someone that's on the market to buy right now, that qualified to buy right now, would you advise them to wait until the rates drop, or would you advise them to buy right now and then eventually refinance?
I think it really depends on everyone's scenario. To capture the rate, to get the rate that they want, then buy, they may not find the property.
Correct.
Right? And then if I told them to buy now, but they're not comfortable with the payment, makes no difference.
Correct.
So everyone's different. I think everyone has to look down to their own budget. If as long as they budget and they're comfortable with the payment, they're comfortable with everything else, they should move forward. And most importantly, I truly, firmly believe what I'm saying right now. Finding the place that you like is harder than getting the mortgage. I really believe that because, I've been through it myself. When I was shopping for my house 7 years ago, I was looking at tons of places. It
was hard to find.
Yeah, it was hard to find. Yeah.
James, what mistakes do you see buyers make when they purchase a property?
One of the biggest mistake that I've seen is that they wanted to wait until the rate comes down, or they don't want to get pre-approved. I think waiting for the rate to come down is like, oh, I want to like you're buying stock, you want to wait until it gets $2 or whatever. And you should always be proactive. You should always prepare to get pre-approved. So this way you understand your, how qualified you are, what the monthly payments are. So this way you can gather all your paperwork ready. This way you're not going to be behind the 8 balls. I have customers that reach out to me that, James, I'm out this weekend with a realtor looking for the place, and I found something I like.
And no pre-approval?
No pre-approval, and they were they were driving around for a couple of hours. They found something they like, and then we run the numbers.
But she can't afford it.
She's not comfortable with the payment. She's not comfortable.
So she wasted her time.
She wasted her time. She wasted real time. It's always good to engage, to understand that. Now, to understand what the payments are, what the current environment are. So this way they have a better understanding. Also, in a lot of customers that they're waiting, they're getting gift funds from their family member to help them with the down payment. I always encourage them that if you're getting a gift funds from your family member, try to get the money in sooner rather than later.
Right.
Yeah, because things happen. I can remember clearly that this is about probably a couple of years ago. The last $50,000 supposed to come in from the father, it never came in. And we're waiting for that to close. And it came in almost a month and a half later.
Wow.
That delayed the whole closing. Eventually it came in, but it
prolonged.
It prolonged the process. The seller sent out time of essence to the buyer to close, but we can close because they're missing that the remaining $50,000. So I always encourage, if you're getting gift funds, always get that money in sooner rather than later, and always please document everything. Keep the paper trail. Paper trail is huge because when you finance, the bank has the right to ask where the money's coming from. So you got to show where the money's coming from. So if you're moving money from your brokerage account to your checking account, have the paperwork ready. Don't just throw it away. I mean, a lot of us does online banking now, but you'd be surprised. Some people, they still old school. They still have their paperwork and they don't have everything in handy. So when you're getting ready to purchase a property, get it pre-approved, get the paperwork ready, and just leave it like that. Don't change jobs. Don't quit your jobs.
Don't buy furniture.
Don't buy furniture.
Don't buy a new car.
Don't buy a new car. Don't go get a new Mercedes. Don't go there and start opening up new credit cards or cancel any credit cards, because when you do all these, it's going to impact your credit.
Right. So this is the do's and don'ts.
Definitely. And you think that, you and I, we have done this type of seminars, these podcasts in the past, but we could never emphasize enough, because we thought, because we do this for a living, so we know.
Correct.
But we still have to constantly remind our clients to let them know, because these consumers, they don't do this for a living.
Correct.
They probably, purchasing a property is once
in a lifetime
for some of them, right? So we have to constantly remind them so it kind of resonate with them.
James, can you describe to first-time home buyer what is the definition of points?
So when it comes to points, points is based on the loan amount that you are financing in the banks, and you pay that points, whether or not it's 1%, 2% to the banks. Now, to the points, what you can do is you can pay points to the bank to get a lower interest rate. It's called the discount points. Okay? So for example, if you're looking to borrow, I'm just going to throw some random numbers. Let's just say the interest rate today is 7%. And if you pay and you're looking to borrow $200,000, that's $2,000. 200 times 1% is $2,000. By paying that $2,000 discount points to the bank up front, instead of getting that 7%, you're buying down the interest rate. You might be getting 6.75. So that's the discount.
So you're buying down the quarter of a point.
It's not written in stone. It changes on a daily basis, but it's a good rule of thumb to use, that when you pay 1 point, ideally you like to get a 0.25% lower in terms of interest rate.
When do you recommend a person should buy a point, and when it's not worth it?
I would recommend, everyone's different depending on their loan size, their terms, and how long they're going to be living at the houses, right? If they're telling me that, hey, I'm buying this place and I'm going to be planning to stay here for only 3 years, and the cost for me to pay for the discount points is, let's just say, $5,000. But if you're going to stay there for 3 years and the monthly payment, it's going to be equivalent to that $5,000, the savings, there's no point. So every scenario is different. So we really have to sit down and do the calculation to see if it's worth it. And that's what we do here. We're going to sit down. We're going to make sure that this makes sense before we recommend to do that or not to do it. But again, everyone's different.
James, do you think that for sellers that are looking to sell their property and expand into a larger home, especially those that are sitting in 2 to 3% interest rates, do you think it's a smart move to do that, or they should stay there for the next 30 years?
Wow, that's a tough one. That's a tough one. You have a 3% interest rate, but if you have to move up, I think,
have you met anybody who's in that position?
Actually, yeah. I actually have. I closed a few last month. They
were coming out from 3%.
One of them was moving from Texas to New York. They got. Well, in this instance, they were relocated, right? So they have no choice. But they're moving from Texas to New York, and they had a 3.5% interest rate.
Wow.
And he was telling me that he really, really was telling his company that, hey, can you let me work from home so I don't have to move to New York? But they have to, right?
Wow.
But he's moving to New York, and the interest rate, obviously is higher than what he has. But let's put that aside. Let's just say someone locally, right? They have to move something bigger. Is it worth it? And listen, if you outgrow your current space, what are you going to do? You have to, right?
Because remember, during COVID, people were buying homes that they didn't like.
Yeah.
right? Just because the rates were so low, they were just grabbing anything that was available.
You are absolutely correct. And actually now you just remind me, this might be last February, almost a year ago. Yeah, they found something because of COVID. They just want to move from their apartment to a house and they found something they like. Well, not they like, but just was able to fit
Good enough to fit the
at the
needs.
time, right? And guess what? It's not enough.
Right.
And they
have to
actually
move.
need something bigger. So they are buying something bigger now, but they have no choice because they needed to. But what happened with that apartment? What happened with that? Well, they're just gonna rent it out or something. But so I think it really depends on every household, how if they outgrow their current spaces, you have no choice, or you have to sacrifice. Moving with the in-law. No,
Not sure if that's a good idea.
Exactly, that's how we're gonna make them find a place.
Not sure if that's a good idea. So, James, tell me, with the 7% interest rate the way it is right now,
Yeah.
I was explaining to my son yesterday, so if someone is pre-approved and qualified today at, let's say, 7%, and they got the offer accepted and contract only halfway signed,
Yeah.
and tomorrow morning they wake up and the rate goes up to 8%,
Well, hopefully that doesn't happen. But
right?
Yeah.
So I just want the public to understand
Yeah.
how significant every minute is in real estate world, right? So if you have, let's say, the contract halfway signed,
Yeah.
but the seller didn't sign yet, and the rate changes overnight where it significantly goes up,
Right.
how it impacts the buyer's ability to qualify.
It definitely impacts it because what we do is we do debt to income ratio, right? We make
Right.
sure that their debt covers their income covers their debt. We're in certain numbers, so if the interest rate goes up, that means their monthly payment will be higher. If their monthly payment is higher and their income stays the same, that ratio goes up. Yeah, it's definitely going to have a huge impact. So if you're signing a contract, your contract's halfway signed, get it done ASAP. There are certain lenders that will allow allow you to lock in before the contract is fully executed, but usually there's also terms and conditions apply. You have to fit certain criteria and whatnot, but sooner it's fully executed, the better. So you don't have to overthink because the seller could change their mind, not sell it to you too as well. I mean, we had a customer in the past where I think the buyer signed and then another offer came in all cash and they lost it, right? I think that happened to
That happens a lot.
Yeah.
Well, this is why they need a great realtor, right?
Yes.
So we always keep our hands on the pulse of the market.
Yeah.
And we always really watch out and make sure that our clients, whether it's a buyer, whether it's a seller, maybe it's both, at one given transaction, when we are on both sides, we are really watching out for the best moment to proceed in the best way possible.
Correct.
And I think that every single one really deserves to have a good professional by their side that's going to guide them, lead them, and really support them to make sure that they're not missing out.
Right.
Because if they don't really sign the contracts at the right time and they don't execute everything at the right time, no matter, it could cost them tremendous amount of money, especially with interest rates escalating to the point where it's going up and not going down.
Exactly.
I was telling my son, if it goes down, it works in your favor.
Right.
Right? But if it goes up, it goes against you.
Right. And you have some customer where they budgeted X dollar amount
Correct.
to pay.
Limited budget.
Right. And then now it's over over their current budget. They might feel the pressure and they may want to back off too, right? So
Right.
sooner we can execute the contract, sooner you go into fully executed, and you can lock it in, you can apply, and then let the bank do what they need to do to take care of the business,
Why do you think the banks are not allowing buyers to lock in the rate when they first get their pre-approval? Do you think that would help the market really take it to the next level?
I think it has to do with certain compliance, certain banks rule their own guidelines. So it's hard to say, and maybe also technology. You would be surprised, So everyone's different. Yeah, every lender is different. Yeah.
What makes Cliffco different from other lenders? What makes you unique?
So
Well, I know that you personally, that you provide a really white glove customer service to your clients. and I know that you are available at all times, and I know that you will guide them and support them to make sure that they're getting into the right product.
Right.
You build your business based on your referrals over the years.
Yeah.
But I just want to hear from you, what makes Clifco unique from other banks?
So great question, and I appreciate that. So with Clipco, I think with us, it's different because we're a smaller company and we're a lot closer. And all we do is we do mortgages. We eat, sleep, and do mortgages. We're not like Chase. They're a great company. They're the 800-pound gorilla in the industry, but they don't just do mortgages. They also have checking, CD, savings, financial advisors. So if this business streamline doesn't, they can focus, they could care less, right? Mm-hmm. But with us, this is what we do. This is our bread and butter. Mm-hmm. We care, all right? And the unique that we do is we want to make sure that if we take on a client, okay, we will service them. We will make sure that we provide them the best option based on their financial situation to help them get this loan. We want to make sure that this process is smooth. At the end of the day, it's one of their biggest purchase in their life. We want this to go smoothly. We also want to make sure that this whole process is good for them. It's also for our referral partner, because this is what we do for a living. And I think everyone here has that same mindset. We want to make sure that, we want to give the customer the utmost service. And so this way we can have more referral down the road. We have more repeat customer down the road. And we have different type of programs. We do conventional loans, we do jumbos, we do the non-conventional, the non-QM loans. We even do fix and flip, okay? So we have a lot of programs where, it's not one size fits all anymore, right? We have so many different programs where if you go into, again, Citizens or Chase, they have their great programs, but then they cannot do the non-QM. We can do the non-QM here, and we can do the hard money loans here, fix and flip to here. So everyone has their own niche, but what we do is we want to make sure that we have all those and we can tailor to what the customer is looking for.
What is the difference between mortgage broker? You guys are mortgage brokers, right?
We're mortgage bankers.
Bankers.
Yeah.
What is the difference between mortgage broker, mortgage banker, and the lender?
The retail lender. So mortgage broker, they don't have their own funds, meaning that they take the file and they send it to banks to underwrite the file. Okay, they don't have their own underwriter. Everything's done at the bank side. Mortgage banker, we have our own underwriters upstairs. Okay, we have our own money we can find, so we can speed up the process and make sure this a lot goes smooth there. So that's a major difference.
And what about lender?
Lender, just retail lenders, just like Chase,
Chase,
yes, yeah.
Well, I just want consumers to understand, right? Because a lot of people always question, what is the difference?
Right.
Why should I shop around?
Yeah.
Some people would like to shop around, and they want to see different options they're being offered.
Correct.
And in many cases, people just want to be committed to one person and just deal with them.
It really boils down to who are you comfortable with, right? I'm always going to say, hey, listen, I appreciate the business, but if you have any concern, call around, make sure, shop around, whatever, right? Obviously, I would love to earn the business, but at the end of the day, if you don't believe me, we don't have that trust, we don't have that relationship, I could tell you anything, you're still going to shop around.
You're still going to do what you want to do.
So you got to be comfortable who you want to work with and do that. And of course, do your due diligence, make sure the person is reputable, make sure the company is reputable. I'm sure they are, but just do that extra homework,
Right. Well, now that you are guiding your buyers and sellers and repeat clients over the years for so many years, I am continuing to refer you my business and feel very comfortable to work with you, James. Until next time, I want to say thank you for your time and for everything that you bring as a value to our communities.
Pleasure is all mine. It's always great, pleasure to work with you. And I see how passionate you are for your buyers and your sellers. You always go above and beyond. And that's something that, when you wanted to work with a realtor, that's what they're looking for. So for you, you're a true gem for your community. And for that, I pause.
Thank you. Guys, continue to watch our episodes because that's what we do here. We bring professionals like James to give you value, to give you information that will be so much educational for all the decisions that you guys have to make down the road. James is a true gem, very honest, very trustworthy person, and I personally always refer and use him for all my real estate needs.
And well, thank you again. And it's a great partnership. It's a great partner work relationship. Yeah, for sure.
Thank you, James.
Thank you, Olga. Thank you.